What is going on, investors? Welcome back to the channel. My name is Jason, and today I want to talk about Sofi stock and should we be giving up on Sofi? For years now, the stock has been dead money, but the company continues to perform. So are we going to stay on this trajectory where the stock continues to flounder while the company improves quarter after quarter? We are investors after all, and if we're not getting returns on our investment, it's hard for us to stick around, right? SoFi is up almost 20% in the last 3 months. Year to date, we're still down over 18.5%. Over the last year, we're pretty much even at about down 2%. And if we look at the 5-year chart, we're down 28%, right? So anyone who's invested in SoFi over a year from today is pretty much down on their shares. Some people who have invested recently when the stock was in that $6, $7 range has made a little bit of money. In my little baby account, I have 230 shares, about $7.41 average. In my other accounts, I have about 3,500 other shares spread out through various accounts, right? So I found this great article on Seeking Alpha. Do we give up on SoFi stock? Is it time for us to give up? We'll see what this article has to say. I think they got a lot of good points about whether or not you should give up on SoFi stock. Let's get into it. All right, my SoFi investors, let's take a look at this article from Seeking Alpha. SoFi, don't give up now. This was written by Stone Fox Capital. I'm not really familiar with them, but let's see what they have to say. Market cap for SoFi is right around 8.5 billion right now. The revenue growth 30% year over year. That short interest is still high, over 17%, right? So we need to get that down. All right, let's take a look at the summary and then we'll break down the rest of this article. It says SoFi Technologies has experienced significant revenue growth since going public, yet the stock remains undervalued, presenting a strong buying opportunity for investors. You would think so, right? I mean, they've beat earnings expectations quarter after quarter after quarter, but the stock has run up afterwards, but then persisted to sell off over and over and over again. And right now, Wall Street analysts are predicting 4 cents of EPS this upcoming quarter, which reports at the end of October. Last quarter, we only did 1 cent, and the 2 quarters before that, we did 2 cents. So it's a double up from the 2 cents and a 4x from last quarter, right? So that's big expectations. Can we meet them? We will have to see. CEO Anthony Noto predicts increased loan demand due to Fed interest rate cuts, further boosting SoFi's growth prospects. I have to agree with that as well. I think we're going to enter a refinance revolution in the next 12, 24, 36 months as these rates continue to go down. People are either going to refinance their high interest loan mortgages and loans, or what's going to happen is a lot of these people that are trapped with those 3 to 4% mortgages and want to move, and as interest rates go down, they're going to want to sell their homes to either upgrade or downgrade. That's going to put some more homes on the market for other people to buy. So we're going to start to see a ton of different types of loans coming in for SoFi, right? Refinances and new mortgages. And luckily, SoFi bought Wyndham Capital, a mortgage company, so they're going to be able to issue mortgages and refinancing over the next couple of years. And I think this is going to be extremely profitable for the SoFi business. All right, next up in the summary, it says SoFi's future revenue growth is expected to reaccelerate with forecasts of 20 to 25% compound annual growth and substantial EPS growth through 2026. And we can already see the beginnings of that with Wall Street, like I said earlier, expecting SoFi to do 4 cents of EPS this quarter. It's a huge jump up. Hopefully we can at least hit those numbers in this quarter, or we're going to see a harsh sell-off of the stock and the shorts are going to swarm, right? So we'll have to see how that plays out in the next few weeks. The stock currently trades at just 7 times 2026 EBITDA targets, while growth rates are forecasted to far exceed that multiple. And then he goes on to say who he is. This guy's name is Mark Holder, aka Stone Fox Capital. He's a CPA with degrees in accounting and finance and leads the investing group Outfox the Street, where he attempts to uncover potential multi-baggers while managing portfolio risk via diversification. He goes on to say, SoFi Tech has had several remarkable years since going public, yet the stock has traded flat to down the whole period. Investors tend to place too much emphasis on how a stock trades over the short term versus the financials of the related company. 100% true. My investment thesis remains ultra bullish on the fintech, with CEO Anthony Noto predicting loan demand acceleration based on interest rate cuts, and the stock already being very attractive compared to the growth. If you take a look at this chart, it's an ugly chart, man. Super choppy. And as an investor, it's not the best, right? Let's move on to the stock versus the company. SoFi has been one of the great growth stories of the last few years. The fintech has tripled revenue since going public in 2021. Amazing. Anthony Noto, you are the man. Yet the stock is down dramatically from where the stock trades in all of 2021. Yeah, man, we were up to $22, $23, $24 per share back in 2021, and the revenues have been remarkably greater right now than they were back then. If they were, trading at $24 back then and revenues have tripled, like, where could the stock potentially go in a bull market for fintech, right? If fintech starts to become a darling again, we could see a $25 price target, maybe even all the way up into the 30s over the next 2 to 3 years, depending on how the market starts to price in SoFi, right? We could see the SoFi Tech price, and then the revenue is this gigantic straight up line to the right, and the stock is down to the right. So there's quite the divergence there, investors. So is this a potential, place where we could capitalize on this divergence? All right, the stock has a bad case of confusing the recent stock results with the performance of the related company. Now the market could be predicting a massive slowdown in the business, but plenty of times the market is wrong and has ignored the actual growth of the company. Well, I don't think the market thinks that, because I think there's 12 or 14 analysts that cover SoFi right now, and they're predicting 4 cents of EPS, right? So it's crazy to think, why is this divergence happening to investors, right? It's hard to stomach, the stock going down, especially the cost of owning SoFi when other stocks, even like index funds like VOO, are up around 20% year to date, right? So the opportunity cost has been harsh for SoFi investors, right? It says Apple is a prime example of how the market confused the company and the stock. The tech giant has some exciting products like the iPhone 16, but sales the last 3 years has struggled, yet the stock has doubled and trades at 30 times forward 25 EPS target due to part of the AI hype, right? So we're going to start to see all these different types of divergences happen, especially when, the flavor of the week is AI right now. So a lot of these AI stocks are trading really, really high, and fintechs are kind of lost in the sauce right now. In fact, the lower interest rates will boost refi requests, which I talked about earlier in that refi revolution. It's also going to help invigorate the economy, because as money gets a little bit cheaper, people are more willing to take out loans and grow small businesses, right? At the recent Goldman Sachs conference, CEO Anthony Noto said this. Noto goes on, we'll underwrite as much as we can in home loans given the nature of the business being capital light. And so we'd really be encouraged by the lower rates burning that business and student loans. It's a great number, as I mentioned earlier, and so we'd be pretty aggressive there as well, and lowering rates to give people good savings. I also think there's a lot of freedom on our balance sheet when we're at lower rates, because we have had great demand for our loans. Now, it's up meaningfully over the last 18 months, 100 to 200 basis points. Lower from here will only make loans more attractive to buyers, in addition to some sort of other programs that we have. Right, so Anthony Noto is letting us know that as rates come down, there's going to be more demand for the SoFi loan business, right, which is great, right? And it says, heading into 2024 Q2, the market was only expecting up to 75 basis points in rate cuts this year. We already did 50 basis points in the last meeting, so that looks like it's going to be accelerated as well, right? So, I mean, if we continue to look through this article, he's looking at where SoFi should be priced at, right? SoFi is set up to reach 2026 revenue of $3.9 billion based on our view of revenue. Hits the high end of internal targets for 25% growth in the next 2 years. He laid out some numbers: 15 times adjusted EBITDA, $18 billion market cap, and a $17 price target, and 25x adjusted EBITDA is a $30 billion market cap and a $29 price target. So I think we're going to be somewhere in the middle of that before 2025 is over, in that 2026 range. I think we're going to be right around $25 per share. So my 2-year price target, $25 per share for SoFi. We can't give up now, guys. We got to stay strong. We got to keep adding shares, and I think we will be rewarded for our patience. Obviously, there's no guarantees in life except death and taxes, but I think SoFi will continue to raise in price as interest rates continue to go down and the company continues to make more and more money. If we're expected to do 4 cents of EPS this quarter, what will the future hold for SoFi as time goes on, as we get closer to 2025 and 2026? Let me know in the comments below. If you like these kind of breakdowns of SoFi stock, I would love to hear your thoughts in the comments. Don't forget to like and subscribe. Peace.